Has your home's value crashed? How far will prices plummet before reaching rock bottom? Canada's housing market has been a runaway train for over 2 decades, with prices soaring to levels that have made homeownership a distant dream for millions. From Toronto's high-rise condos to Vancouver's million-dollar starter homes, the market has been a hotbed of speculation, fueled by cheap loans and a frenzy to get in on the action. But the brakes are on. The housing bubble is bursting, and all signs point to a long, steep decline before prices hit bottom. Today, I'll walk you through what's driving this crash, how much further prices could fall, and what it means for Canadians watching their biggest investment or dream slip away. Before we start, we have to clarify what is meant by a housing bubble. A housing bubble occurs when home prices climb far beyond what people's incomes or the economy can support. This bubble is driven by speculation, people buying properties not to live in but to flip for profit, low interest rates, and a fear of missing out. Canada's market is a textbook example. Since 2002, home prices have surged 375%, while wages have barely budged. In cities like Toronto, Vancouver, and even Montreal, the cost of a home is wildly out of sync with what people earn. A few years back, a global real estate report ranked Toronto as the 3rd riskiest housing market in the world, with Vancouver close behind at 10th, signaling a high chance of a sharp correction. Why is Canada's market so fragile? First, there's debt. Canadians owe $1.86 for every dollar of disposable income, one of the highest debt-to-income ratios globally. Financial regulators have flagged rising defaults as a major risk to the economy. Then there's speculation. In Ontario, 41% of home purchases in 2021 were by investors, not families looking for a place to call home, pushing prices to dizzying heights. For years, ultra-low interest rates made this possible. In 2021, the Bank of Canada kept its policy rate at 0.25%, letting buyers borrow big and drive demand through the roof. But that era of easy money is over, and the market is feeling the squeeze. The signs of a bursting bubble are unmistakable. Home prices peaked in March 2022 and have since dropped 17% nationally. In Toronto, home sales this October fell 49% compared to last year. Vancouver saw a 45.5% decline, and Montreal's market is slowing too. This isn't just a pause. It's a market in retreat, with families holding off and investors pulling out. A financial analysis warned that this correction is far from done, predicting a 20-30% drop over several years to bring prices closer to reality. Housing experts also point out that Canada's growing population, fueled by immigration, isn't enough to prop up prices when supply can't keep up and economic pressures are mounting. What's behind this downturn? Interest rates are the biggest driver. To tackle inflation, which hit a 40-year high of 8.1% in June 2022, the Bank of Canada raised its policy rate from 0.25% in 2021 to a peak of 5.0% by mid-2023. This rapid hike, the steepest in decades, made borrowing much more expensive. Mortgage rates climbed above 5% for many, and variable-rate loans became a heavy burden. Imagine a family in Mississauga with a $700,000 mortgage, now facing payments hundreds of dollars higher each month. By June 2025, the bank had cut rates to 2.75% to support a slowing economy, but the earlier hikes have left many households stretched thin, with missed payments on the rise, as regulators have noted. Economic uncertainty is piling on. A May 2025 report highlighted a 20% drop in national home sales since November 2024, driven by fears of U.S. tariffs under a new administration. These tariffs could hit Canada's economy hard, cutting jobs and confidence. Active listings are up 30%, meaning more homes are sitting unsold, which pushes prices down. An April 2025 forecast predicted a 0.3% national price decline for 2025, with sharper drops in Ontario and British Columbia. A March 2025 analysis reported a 29% plunge in home resales in early 2025, the worst since the pandemic, with Toronto and Vancouver prices still sliding. The condo market is especially shaky. A December 2024 report forecasted significant declines in Toronto's condo prices through 2025, with sales already down 57% year over year. How far could prices fall? Forecasts vary, but they're not optimistic. Some economists predict a 14% drop from the 2022 peak to the trough, which we haven't reached yet. Others warn of a 30% crash in a worst-case scenario, though they note that even this wouldn't make homes affordable in places like Toronto. A financial blog projected a 20 to 30% decline over several years, arguing that Canada's market is so overinflated it defies economic logic. A May 2025 analysis pointed to high household debt, still elevated interest rates, and a potential drop in immigration due to policy changes as factors that could keep prices falling for 2 years or more. In an extreme case, some compare it to the U.S. crash of 2008, where prices dropped 40%, though most say that's unlikely here. Even so, $1 trillion in home equity could be wiped out if these forecasts hold. History gives us a warning. Canada's housing market has crashed before. In the late 1980s, Toronto's prices soared 150% in 3 years, then fell 27% by 1996. Vancouver saw bubbles burst in 1981 and 1994, each followed by years of declines. Today's bubble is bigger, built on higher debt and worse affordability. In Toronto, a home costs 8.6 times the average household income. In Vancouver, it's 11.9, among the worst globally. Compare that to Germany, where homes cost about 4 times income and renting is common. Canada's obsession with home ownership, fueled by speculation, has left the market on shaky ground. Economic headwinds are making things worse. Tariffs, as noted in recent reports, could slow Canada's economy, reducing demand for homes. High inventory, 5.1 months of unsold homes nationally, is dragging prices down, especially in Ontario and British Columbia. The condo market in Toronto is a particular concern, with oversupply and weak sales signaling further declines. Even with recent rate cuts, economic uncertainty keeps buyers on the sidelines, prolonging the correction. The tough truth is that even a big price drop might not fix affordability. Economists estimate that a 30% decline in Toronto wouldn't make homes affordable for the average family. It could take a decade or more to rebalance the market, especially in cities where demand remains high due to immigration. Canada welcomes hundreds of thousands of newcomers annually, many settling in Toronto and Vancouver, but housing supply can't keep up, keeping prices elevated despite the downturn. Tariffs and a weaker economy could make it harder for buyers to enter, extending the slump. What does this mean for you? If you own a home, especially in Toronto or Vancouver, your property's value could drop significantly. A condo owner in downtown Toronto, for instance, might lose tens of thousands and even hundreds of thousands in value, depending on when they originally purchased. These losses will inevitably impact savings or retirement plans. If you're looking to buy, lower prices might seem promising, but higher interest rates, even at 2.75%, and economic uncertainty make mortgages tougher to afford. For investors, the days of easy flips are over, with high inventory and low demand changing the game. This crash brings opportunities for some, but it also brings pain, lost wealth, tighter budgets, and a slower economy. Where are we headed? The bubble has burst, but the decline is far from over. Prices could fall 14% to 30% or more, depending on interest rates, debt, and global pressures like tariffs. This isn't a short-term dip. It's a deep correction after years of excess. For Canadians dreaming of homeownership, the path is uncertain. Lower prices might help, but they come with challenges, higher borrowing costs, and a weaker economy. The market is still falling, and the bottom is a long way off. Thank you for listening. This is a story that's still unfolding, and every Canadian should keep a close eye on it. If you found this video and information useful, please smash the subscribe button and hit the notification bell so we can keep providing you with timely information you can apply on a daily basis.